Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's update our view on the gold market. Just on the first look, the first glance, you could see and compare the reaction that now you have on the euro currency, for example, on the 10-year bonds and on the gold. On the 10-year bonds, I could show you. Let's take a look what has happened recently. It's just outstanding rally on the 10-year yields. Rally actually has happened on all yields across the board. And as we mentioned in the Telegram, not only in the United States bonds, but across the globe, European, United Kingdom, and all the others. It just means that it's really wide and deep revision of the previous opinion concerning interest rates and inflation. As we warned even a few months ago, that market is wrong with some consensus or its view on interest rates from the Fed and inflation. As we warned almost on every week that inflation will increase and we will get the second spiral. You can see what's going on right now on the commodities, but these prices are not yet involved in recent indexes. It's just yet to happen. Usually lag approximately around 5-6 months. So closer to the elections in the United States, we will get just inflationary shock probably. So we will see. But gasoline prices already are moving higher in the United States. So and you could see how really gold resists to overall pressure from the high interest rates. The reaction here is relatively small. It's not really significant. And as we said, there's absolutely no problems at all if the market will show the pullback to the 23-22.80 support daily oversold in a few weeks. So maybe starting this week and later, if this retracement will happen, absolutely normal. If even market drop here, it also will be very small retracement. We are not considering taking any shorts position here. Context stands bullish. We're mostly interested with the accumulation of the gold and taking the positions with the major tendency, because it's really very unstable situation with it a bit skewing in favor of gold rally on more chaos, more really warning moments in the world, in the politics and economics. So gold is currently tending to positive surprises rather than negative surprises. And from that standpoint, it might be really costly if you would decide to take the short position, at least on the higher time frames. That's why here we're just sitting on the hands, wait for the pullback. If we will get a great dip to buy, at least around 22.80, that will be great, and we will consider it. On the lower time frame, on the 4 time frame chart, you could see what's going on here. We could, if we will try to recognize kind of the hand and shoulders pattern, so now it's forming. It's very small, and here we have the two targets. First is 23 even, next is 22.72. That's really great area. So take a look. First of all, this is daily oversold, as we said, and it's accompanied with the confluence. So on the daily chart, we have just a single level right there, but in reality, as you could see on the 4 time frame chart, this is confluence support, and this is also downside XOP 22.70. So once market, and if it will complete it, this will be a great area to consider taking the long position on the gold market. On the hourly chart, it's probably will be interesting only for the bears who make the scalp trades on the gold. So our setup with this Gartner Steeple to sell started well. It's actually gold likes to form very often, is forming 222 patterns on the moment of the reversal. This is some special feature of the gold market. So now, as you can see, this ABCD pattern down, market's mostly completed the XOP, just a few cents have been reached yesterday, shows the bounce. Now it's returning back down to the confluence support area 23.26, 23.28. So this will be support. If you would like to make the bet with this hand and shoulders pattern, you probably could focus just on the most recent downward action. So if market will hold this shape, obviously it should not erase the right arm, right? So from following this logic, you do not need to hide too far stop somewhere above this area. At the same time, it comes into the confluence. That's why here we could get some minor pullback, or at least some reaction. So actually, reaction already has happened right here. So when market has tested for the first time, bounce, now returning back down to it. And well, if you would like to, and you're interested with taking the scalp short position, this is the battlefield that you could use for trading in today, tomorrow sessions. So just focus on this most recent swing down. Stops probably will be above this area, and watch for a bounce. If you will get minor pullback here, that's theoretically might be used for taking the short position if you would like to. But as I said, this is not our primary object. We're not intended to take any shorts because this is speculative. On intraday charts, mostly we're watching for moving with a major tendency. That's why we use this retracement, whatever it will be, hopefully to the 2280 area, as a chance to get good entry opportunity later in this week, or maybe in the beginning of the next week. So that's our 2 cents on the gold market.